Hi, everyone. I'm Margie O'Brien from Providence. I'm a television reporter and the moderator tonight, and I'm secretly excited to hear what everyone's going to talk about because I also have a small business. Image Mob is a media consulting company here in Rhode Island, and we teach people how to shine on Zoom interviews just like this. But I really have to be honest, I love the stage and the packed room, so I can't wait till we get back to that. But in the meantime, let's introduce our amazing panel. We'll start with Ella Hood, a board member of Mass Challenge Advisory Service, venture capital from the greater Boston area, rather. Dan Gertrudes, CEO and co-founder of Growth Lab Financial Services here in Providence. And joining us from the West Coast, David Brin, scientist, tech speaker, consultant, and author. And Ella, I would love to start with you. I think right now, every startup is looking at their plan and saying, is this working? What do we need to do? So what is the survival plan for a startup?
Thank you, Margie, and thank you and hello to everyone. Sorry that we started a few minutes late. We had a little bit of a tech issue here, which we're all learning to live with in the new age where everything is very digital. Anyway, without further ado, we'll start with the COVID-19 survival plan. So I will go over in my short presentation on how do startups and portfolio companies need to adapt to this situation, new situation. My perspective comes from my experience from being an M&A attorney and representing investors and structuring deals. Also being a board of directors in Mass Challenge, which is an accelerator. So through this, I help select startup portfolios and also decide on their direction and guide them. And lastly, also as a founder of a startup myself. So I think gathering all this experience, I'm happy to share my insight of where things are heading. I think, you know, in every crisis that we're trying to learn what to do, we have to look also backward in order to learn forward. So this, unfortunately, isn't the first crisis, and it certainly isn't going to be the last. It's definitely unique, but it hasn't been the first one that hit, you know, our economy. Let's look at the last two big crises. 2003, SARS. Actually the same family of viruses, the coronaviruses. In 2003, popped its ugly head with this new virus that scared the whole world, especially because the mortality rate was as high as 10%. Luckily, it wasn't as contagious as the current coronavirus, so it was contained to Asia. But Asia certainly had received a big hit out of that and had to really quickly respond. So companies had to face a complete shutdown, and definitely the Asian market has taken it very seriously. Everything stopped just at once. But in spite of this complete stop, companies that learned how to pivot and adjust actually seen expansion into the time and era post-SARS. For example, Alibaba, at the time SARS hit, was just a small platform. It was 4 years old. It was a small platform, mainly for business to business, basically supplementing the marketplace for vendors that came to China and kind of struck the deals. Of course, all travel stopped, the conferences canceled, and Alibaba had to decide what to do. The founder of Alibaba was very smart to invest in a very sophisticated platform that enabled him to come out of this crisis as the best B2C platform that not only is the #1 platform used in China, but also expanding into the world. So when everyone were thinking, what are we going to do? He really realized that a digital presence is the way to go. And he had like a secret team of 6 people that developed the platform and came out with it during the crisis and became a #1 platform used after the crisis. The same thing happened with the JD.com, that at the time the crisis hit was a small 12 retail stores company, which had to shut down 11 of the retail stores because everything basically shut down. They were selling electronic products. And of course, going from 12 shops to 1 shop, the founder had to decide what to do. And he also decided to develop a digital platform. Now, at the time, 2003, it wasn't the same digital presence that we have today, that most companies have a digital presence. At the time, it was very novel. But because they pivot and innovated, JD.com today is the #1 retail in all of Asia for electronic goods, and they have other products as well. Moving into the 2008 financial crisis, we had several large companies that had to pivot in addition to new startups they just started at the time. So companies, for example, like American Express and Starbucks were both companies that were really badly hit. American Express was just recovering from the 9/11, where all travel stopped. And then the 2008 financial crisis hit, and they really had to decide. The founder famously said, not the founder, sorry, the CEO famously said, we either have to innovate or die. And their innovation came with a good foresight into investment, heavy investment in the digital presence, especially artificial intelligence. And it paid off. American Express came out after the crisis as a leading card, not just a card. Starbucks was going through a crisis of its own because they went through a very rapid expansion. And that rapid expansion left them vulnerable to a lot of bureaucracies. At the same time, 2008, people were very sensitive to what they're spending. And Starbucks is known to be not the cheapest cup of coffee on the street. You had at the same time McDonald's opening coffee shops and selling it for a fraction of the price. And they actually brought the previous CEO back, and he decided that he has to reconnect with the consumer. And the way he reconnected with the consumer was basically create the digital presence. He actually spread the word through social media and created what was called the My Starbucks experience, and creating this, this new innovative way of marketing Starbucks. Not only helped it survive through the crisis, but positioned them as a leading Starbucks where people are really willing to pay the extra buck. Uber and Venmo are example of companies that started on the financial crisis. And I'm sure that a lot of startups that are actually struggling with the same question right now. It's a terrible time to start. No one's looking, there's no investors. Would be encouraged to know that if you really pivot, focus on your proposition and try to solve a problem that right now the current market has. The fact that it's a really bad time to raise funds isn't going to stop you, because there's going to be a lot less competition as well. And companies like Uber and Venmo proved that in spite of starting at the financial crisis, the worst time, they have evolved to be complete disruptors and wonderful companies. So, as I just mentioned, COVID-19 present not only a crisis, but also an opportunity for companies, especially in digital solutions space, artificial intelligence, automation, data and analytics. Also, companies that able to provide solutions in the supply chain redundancy. And what I mean by that are problems that companies right now are facing because they're relying on only 1 or 2 vendors. So even our local Citizens Bank suddenly faced the problem with their call centers, that some of the areas that were hit worse weren't able to operate call centers, and they immediately had to find different markets. And the setup of that was difficult. And they really learned from that you have to have a backup plan. You cannot rely on one or two vendors. You have to have a redundancy plan. So in order to mitigate the risk. So this is a plan for future, but also companies that are able to offer solutions with a more open market definitely can pivot. And any company that capitalize on the market of consumers shopping more online and workers working more remote definitely have a good market right now to try to penetrate. So how do we manage now? As I said, definitely companies need to pivot and push and focus also on efficient funding management, especially startups that do not have a product that is already making money, have to really manage their money efficiently. So I'll elaborate on that, funding dilemma. And in that, I will talk on both sides of the scope, from the VC, PE, and other investors, and from the founder side. I'll start with the VC because I think understanding their challenge of funding right now will help understand how founders need to act. So naturally, the focus shifted, VC focus shifted on the management of current portfolios rather than starting and signing on new deals. Right now, in a time of uncertainty, it's much higher risk for venture capitalists and private equity to invest, and they're going to naturally focus on trying to help their portfolio companies survive this era because they're already invested in that. Instead of checking new deals, it's also very difficult to check remotely, do due diligence remotely. So naturally, they're going to focus on current portfolio. We're going to see less project being funded, definitely until there's more certainty in the market. Founders shall expect the deal time to take much longer and also expect lower valuation. Makes sense. If the PE and VCs taking more risk, makes sense that the companies should expect lower valuation. Higher risk, higher reward. Also, they should expect that the investors are going to be expecting to be granted more protective rights, things that in a more competitive market disappeared, like fully ratchet anti-dilution rights might see a comeback. And when I say fully ratchet anti-dilution rights, I mean the protection of investors, of prior investors, to be fully protected against dilution when the next investors come. So the way they're protected against that is by getting more equity to basically protect them from anti-dilutions. That, and in addition, all kinds of veto rights and other rights that in a very competitive market, kind of like bidding wars, disappeared. Now they're going to see a comeback because they're taking more risk. And also, investors are going to focus on companies that can work remote. Naturally, we don't know how long this is going to need, so they want to look at companies that are efficient and able to work remote. So from the founder side, startup should prepare for funding for the next 12 to 18 months. We don't know how long this is going to last, but in any event, there's a pipeline and it takes time for any investor to decide on an investment. So even from the time, let's say things go back to somewhat normal in 6 months, it's going to take time when you start a new investment. So a good planning would be 12 to 18 months. Companies that are just starting, seed or pre-seed, that are desperate for money should try to apply for grants, family and friends, angel investments, any loans, because definitely they're going to have to, if they're looking for equity funding, the price they're going to pay is going to be very high, as I just mentioned on my coverage in the PE and VE side. They're going to request lower valuation and more rights. Also, there is the loans. One of the loans avenue is the PPP part of the CARES Act, but I do want to qualify that in this, how it qualifies to portfolio companies and startup companies. There is a definition in the CARES Act and the PPP of affiliated companies, which gives a really, which puts the companies in a problem of how to actually procure these loans. Affiliated is being defined in a pretty broad manner. So it's not only holding more than for 50%, but also all kinds of rights, veto rights and other rights that the private investor or the VC might be holding over the portfolio company that are going to constitute as an affiliate. As a result of that, the condition in the PPP loan that says that the company needs to be under 500 employees, and maybe the company has 200 employees, is going to suddenly be a lot more difficult to get by, because if the venture capital or the PE are going to consider to be affiliate, all of the portfolio companies are going to be considered affiliates. So now they're going to count the employees of all the portfolio companies, basically kicking the company out of eligibility to the PPP loan. So there is a bit of a problem with that, and even though a lot of lobbyists for venture capital and PE tried, and they spent a hefty amount of money, tried to appeal for that, to change the definition. They didn't have much success, and the only way right now to actually get by this condition is basically signing on and basically giving up those rights by the investor. And that's something that a lot of investors might not be willing to do. So this is a little bit of a problem. The other thing that founders need to do is, as we mentioned, rethink the strategy, focus on services that will serve the post-COVID market, and avoid overexposure to market that will take a long time to rebound, like tourism and airlines. So how's the liquid landscape is going to look? When I mean liquid landscape, I mean the changing landscape. And some of the changes are inevitable and are here to stay. So they're not going to be so temporary. For example, workforce behavior. So right now we're in a situation where most people are kind of like deskless workers, and most of the engagement is touchless. Certainly right now, most of us work this way, but even in a few months where employers are going to request employees to come back, I expect, as a lot of other people expect, that things are never going, well, at least not in the short future, are going to go back to normal as they were. But we're going to see some sort of a combination of working a couple of days from home and working a couple of days in the office, from a couple of reasons. First of all, companies understand that they can efficientize. They don't need that much of leased space, so they can save some money. I think there's no more the stigma of, oh, you're working today from home, because we're all working from home. And actually it became so efficient that some people became more efficient. They don't waste time on the commute. They stick their like little workout in the lunch, whatever, and everyone's happy. So from a combination of some workers not being comfortable to go back until there's a vaccine, until it's tested, and a combination of it being more efficient also from a corporate point of view, we're probably going to see an environment where we're going to see more of a combination than just everyone going back to work. Video conferencing definitely is going to be used more, just like we're doing now. There's a lot of efficiency in that, because you don't need to commute. Everyone need to commute for the video. More costly for everyone. Physical distancing is something that probably going to be there for a while, and create a new body language. We're going to see new leadership mindset and behaviors. I'm going to run because I see my time. Consumer behavior is going to change. We see a lot more shopping online. people are comfortable more with shopping online. So they're probably going to continue shopping more online. And some of the spending is going to be cautionary after that. People got a blow and they don't want to take any more risk, and they're going to spend a little less. Commuting, we're going to see a little bit of rise in micromobility, which is like scooter share. I would elaborate more on that, but I see the time, so I'm sorry. I'm just going to skip to the ending. So I have to give all the rest of the speaker time to talk. The future, I think I'm an optimist. Every innovator needs to be an optimist, and an optimist in the knowledge that we can create better future and we create solution to problems. And as Winston Churchill said, never let a good crisis go to waste. I think the market is going to see also a lot of opportunities as a result of that. So in that, I'm saying goodbye, and thank you so much, Margie, and pass it to the next speaker.
Ella, I did have one question for you, and I love that quote from Winston Churchill. You said that there is a majority of the businesses that are going to have to pivot and push to succeed. How about some of those companies that are making the most of this time? They might have lucked out just by being in a certain business, but how about some of the companies that have touched on the kind of industries that we're really relying on? For example, the digital payment ecosystems. How are they going to make sure they make the most of this opportunity?
So we do see companies that just bloomed in this, like Amazon. I mean, Amazon is taking over the world basically. The boxes everywhere. I think opportunity going to be there for any company that is associated with online payment and online deliveries and everything. Definitely for them, they just have to push and push, because right now it's a huge opportunity for them.
All right, Ella Hood, thank you so much. Dan Gertrudes, I'd love to move on to you. I know that some small businesses are pretty pleased that they're getting some federal stimulus money, and this is new for this crisis. But can you touch on the pandemic relief that some of these companies are getting, and also how they have to make the most of this to avoid their own Black Monday?
Good question. Can you hear me okay?
Yes.
I know we had a little bit of, okay, great. So I'll start with the future first. Planning is now back in vogue. So thank you, Margie. And I'm glad Ella went first. So here at Growth Lab, did I just lose you?
Nope, you're good.
No, okay, good. So here at Growth Lab, we're a finance as a service company. So we're providing businesses with much needed insight and intelligence to make good business decisions. And it starts with the solid accounting systems and processes, rigorous financial planning, reporting, analysis, insightful CFO, and more importantly, or maybe less importantly, but also as important, is value-added tax advice. So I'll come full circle, but our team came up with the idea of Small Business Black Monday. Back in March and April, as companies were still trying to figure out what exactly just hit them, many were panicking, right? And also clamoring for PPP loans. I think some companies, actually thought about nothing else but PPP loans for almost like 2, maybe even 3 weeks. We knew that most small businesses didn't have a plan going into this. They saw our government funding, free money as an easy way out, but also as it was a necessary way out. But they still didn't have a plan. And so the headlines at the time, it feels like eons ago, but it was literally a month ago. At the time, the headlines were conveying a message of free money. And so why not take it? Well, as we all know now, that this wasn't really free money. There was uncertainties around the requirements of the forgiveness, especially the calculations, what's in, what's out, constraints, with who could borrow, as Ella just mentioned, especially around PEs and venture capitalists with large portfolios. So there were like many unknowns, and frankly, there's still a lot of ambiguity. Even as we're approaching literally 2 months after the first funding hit bank accounts, the rules continue to change. I mean, last week and this week, most recently with the PPP Flex Act. So I do believe that the PPP Flex will end up being and going down as probably one of the greatest gifts to many small businesses, because without it, many would have found themselves with so much more leverage, with debt on their balance sheets that they couldn't afford, especially, never mind on a cash basis, right? And that is where the idea of kind of Black Monday came up. It was a Wednesday night, 6 o'clock at night, with a couple of my team members, and it was essentially this. As we saw small businesses kind of clamoring for all this, we said, that's going to be the day that everybody wakes up. Small businesses wake up and realize that, hey, customers didn't really come back as we all expected, and there's no cash in the bank, and I can't really afford this free money anymore because it's now debt, and it's real debt. Although the notion of Small Business Black Monday has decreased for many, even in the last week, we are still not out of the woods just yet. I'd say the PPP Flex Act essentially will help those businesses that never really planned. They took it and sort of ran. They took the money, started spending it to maximize the forgiveness instead of actually optimizing for the forgiveness, but in the context of business strategy and planning. We've been doing a lot of talking about this. So now I am a proponent of the PPP Flex because, it's really going to benefit those that didn't plan, but it's obviously the right move because small businesses, for the most part, they don't have sophisticated financial planning capabilities. There are businesses, let's face it, the difference between 8 weeks and 24 weeks, it's an eternity right now in our fast-moving world. And it's going to be a lifeline for these companies. The unfortunate side to this, of course, is, there were companies, and many of Growth Lab Financial's customers, for a plug, they began the planning process well early on, right-sizing their businesses, pivoted, they made the right, smart, strategic decisions well before the PPP loan even hit their accounts. Yet now, those companies that made the optimal moves, they have the information, they made decisions based on the information they had. Now they find themselves at a disadvantage because, you're sort of playing with rules, and I've been saying this a lot. You're playing with rules, and you're in the 8th inning of a ball game, if there are any ball games nowadays, whose rules just continue to change. So it's who can even keep score? So with that said, planning would have looked a whole lot different for these companies had the rules been 24 weeks versus 8 weeks, 5 years versus 2-year terms for starters. Now I'm seeing companies that are actually beginning to lay people off and do partial shutdowns because of forgiveness periods that moved out. So instead of doubling down on the original intent of the law, they're now saying, hey, I can actually stretch this out. So let me begin to pull back on employees. So anyways, I don't want to waste, but I don't want to spend the whole 10 minutes talking about PPP loans and EIDL loans or other government incentives. I do want to talk about planning, and there is an importance piece to the planning. There isn't one small business owner or startup founder or not-for-profit executive director that hasn't been asked, so what's your plan? This is like the dreaded 3-word question that just keeps every small business awake at night, right? Do I have a plan for, fill in the blank? Do I have a plan for my customers if they don't all come back? Do I have a plan if I'm allowed to open up at just half capacity? What if my PPP money runs out? Or what if, worse yet, my PPP loan actually becomes a permanent loan? How do I afford that over those 2 years? Now, granted, now it's kind of pulled back or moves forward and it's 5 years. But what if my employees permanently continue to work remotely, as Ella alluded to? Because, let's face it, working from home, maybe 2 or 3 days from home, 3 or 4 days from home, or a day in the office, that's a whole new paradigm. Do I have a plan if new employees decide to, to take longer to, or what about new employees, right? You're hiring these new minted college grads. Last year, we hired 6 or 7 new college graduates. And I remember what it was like. It was a little bit of hovering, and we're not micromanagers. We have management infrastructure and management framework in place. But these young adults, they need training and development. It's going to take, do I have a plan for new employees to take longer to really get up to speed and break even and be profitable? So anyways, planning ultimately is going to help small business owners better understand and articulate the drivers of their business. it forces you to think about the external and the internal factors in your business. It also begins to provide you with some insight into the risks in your business, and of course, more importantly, or maybe as important, the opportunities to your business. Thinking about this PPP loan, there were many companies that went out and just started bringing back employees versus truly thinking about and weighing the balance between maximizing forgiveness and optimizing forgiveness. And I know the rules have changed, but I have to tell you, there are a lot of my customers and a lot of small businesses that if they could rewind 6 weeks ago, 4 weeks ago, they probably would have made different decisions had they known that there was a chance, or not even a chance, but had the rules been written in the beginning. And so, with that, at Growth Lab, we know that all small businesses are challenged with some or at least the following 4 things. We tend to call them the Growth Lab 4. We know that small businesses are challenged with understanding their cash flow. It seems basic, right? It's sort of a basic planning, even in family life, family finances. It's cash coming into my checking account, and it's mostly cash going out of my checking account. Number 2, where are you making and losing money? Seems simple enough, but it really isn't, because without solid accounting systems and tracking systems, enterprise management systems, without that, it's very difficult for small, medium-sized businesses to understand where they're truly making and losing money. And so the third would be how to better market for profit. A lot of small businesses and businesses in general, we're marketing for revenue, right? All revenue. We don't say no to revenue, but there is a difference between good revenue and bad revenue. And even in this time where you have factories shutting down, employees being laid off, and now you have this PPP loan cushion, I find some small businesses making bad revenue decisions that they otherwise wouldn't, just for the sake of getting that PPP loan forgiven. Not a good idea. You shouldn't come off of that. Now, obviously, you shouldn't take that in isolation, but generally speaking, it's not always a good idea to just go after bad revenue. And the fourth challenge is paying employees for performance. Many companies are really paying employees to clock in and clock out. Now, so how do you begin to develop systems and processes around paying employees for performance? So, but with good solid planning, especially when you sprinkle on some, call it scenario planning, companies can start to better manage and understand these 4 challenges. Now, more than ever, my advice to small business execs is start planning. And so how do you do that? I know planning can sometimes feel daunting, but there are really 3 simple steps. It's very complicated, I get it, but I'm a big believer, if you're going to do it yourself, keep it simple, don't overthink it, don't over-trivialize it. So first, create a baseline plan. And I know I don't have slides here. I like to talk a little bit off the cuff here, but there are 3 simple plans here, right? Create a business plan is number 1. Stay focused on cash. Keep it simple for now. Grab a high-level profit and loss statement, income statement. Make some assumptions around your revenue, and just extrapolate those out a few months, maybe out and through December 2020, or better yet, would be great, December 2021. And lastly, let's connect the dots. Revenue minus cost of goods sold equals gross profit, minus your operating expenses, minus your payroll, and at the end of the day, guess what? You have profit, right? Number 2, think about your business model. So as we begin to open up this economy, your business model has changed. So I tell my customers, stop putting your head in the sand. Things have fundamentally and structurally changed. You need to begin to think like a visionary. You need to start thinking beyond what you have known, your current paradigm, what you have known for the last 20 years, 30 years. Break that out. And don't sweat the small stuff. So thinking about your business model, understand what the 3 things that really drive at the cash and profitability of your business. And it could be a driver around your customers, around how you render or deliver that service or product. Think about what are those 3 key drivers. They probably answer 80% of your issues or challenges. And then I would say also, as you're thinking about your business model, focus on how your revenue truly contributes to your cost of goods sold, to your operating expenses, to your payroll, and ultimately, of course, to your profit, because that's what's left to pay off not just yourself, but pay off debt, pay off other stakeholders that you may have. So I like to always look at my revenue as a pie. What piece of my revenue went to X, Y, and Z? And the third piece of planning is a scenario planning. This is the fun part, right? Build a good, base, ugly, so that would be three, a good, a base, an ugly scenario, but do it in the context of post-COVID-19. Now make some assumptions. If your business says, oh, you think your business is going to open up in full capacity in June, great. But also think about the other side, which is, what if you only open up at 50% capacity? Think about that restaurant who now has restrictions, can't just like open the doors from one day to the next. That's going to be a slow progression. You're opening up at 50% capacity come June 1st. You're opening up maybe up to 80% capacity in September. And God forbid there's a COVID-19 wave 2. Think about those things. Great. Now you can begin to layer on your PPP loan and your forgiveness assumptions. These are going to change based on the scenarios you decide to execute. But the rules of the game have changed. So go with a scenario that really delivers the most cash in the next 12 to 18 months. And at the end of the day, you can't control everything, so don't even try. The name of the game here is survive. It's in the short term, but with an eye towards thriving in the longer term. And the key here is plan, plan, plan. And so the future, I think, is small, medium-sized businesses really need to start planning. And so the future side of me says planning is back in vogue, and I think it's going to be here to stay.
Dan,
those are my prepared comments.
From talking to your clients, are they fearful or maybe even reluctant to invest any of that slice of the pie towards preventing or towards sanitizing their company, adding light kits, because we just don't know what's going to happen next week, next month? Do they just not want to spend the money on those right now?
So the answer would be no. I think that's almost secondary. There's got to be a greater, again, you got to put 80% of your effort into those top three drivers. Do I bring employees back? Do I have the revenue to support? Am I bringing the right revenue in? The other stuff is, call it a little more compliance. Like, you cannot get up to bat unless you have masks for your employees, unless you've thought about your footprint, unless you've thought about onboarding new employees. To me, what your question is like, that's compliance, and you can't be in business without that. So have we seen it? Sure, there are always going to be those small businesses that their view of the world is going to be a little different than mainstream view. But I don't want to characterize that the majority are thinking that way. If anything, I believe that the majority are actually thinking of this more towards, okay, permanently, we have changed fundamentally. And so how do we alter our business model with a new physical footprint requirements, with employees now working remotely? With our customers, I mean, Ella just described some customer behavior changes. How are we able to service those the new paradigm that we're in?
Thank you so much, Dan.
And I just realized I'm on phone and on video. I'm sorry.
Monopolizing the screen here. All right, David Brin, journalist from California. David, I'm curious about what small business sectors you see as thriving during this time. You sort of have to put on your visionary hat for us. Why is this so important to think big during this time?
Well, yeah, essentially what you need to do is to be able to look out for assumptions that are getting elderly. I mean, that's what all of our competitive professions that use facts have to do. In science, for example, my background is in science, you look for sets of assumptions that are getting old, that are starting to fail tests, nibbled around the edges, and you dive in. For example, I think the biggest it has nothing to do with COVID, it has nothing to do with our current crises. I think it has to do with something that is extremely elderly, and that's the notion that the internet is going to continue to be financed by advertising. This is simply impossible. Now, I would have said this 20 years ago, and always remember that things can keep going much longer than you thought, like tulip crazes and the current stock market. They can be maintained by momentum. But nevertheless, it is simply logically impossible for advertising to continue to support the internet for many reasons. One is it's all getting consolidated into a few big players. It's killing the newspapers and the industries that used to rely on it. And the public won't eventually stand for Amazon and Google and Facebook becoming quasi-governmental in their powers over us without having quasi-governmental, at least being public utilities. But the biggest reason why advertising is going to collapse is simply technological. How many of you remember the movie Minority Report, where Tom Cruise has had his eyes replaced, and so he's going down a shopping mall and holographic ads are pushed at him, Mr. Yakamoto, because he has, Mr. Yakamoto's eyes and it's recognizing them. That's not important. What's important is that as the algorithms developed by Facebook, Google, and Amazon, etc., become better at tracking us and understanding us, you'll notice, for instance, if you searched at all about a type of scarf, that's what you're going to get in your ads, in your sidebar ads. As these services, as these ad projection services who are answerable to Google, not to you, as they become better at scoping you out, they become better at becoming essentially a shopping assistant. And there's no reason why it shouldn't simply be resident in your phone or on your own computer if it's going to be a shopping assistant. There's no reason why you should pay any attention to advertising ever again, starting maybe 3-4 years from now. So essentially, how would the internet continue to function? Well, one method is micropayments. And I've been exploring micropayments. People can look up my name or look underneath the recording for this podcast, and I'll provide Margie with links to what I have to say about micropayments. But it's been tried before, and it was missing the secret sauce. I think that people are going to find the secret sauce, and people will be liberated to be able to buy a New York Times article a nickel at a time. Think about how much of a relief that would be. That is an example of what I meant by look for assumptions that you were taking for granted. Now, in science fiction, of course, we have a big track record. Sometimes we're completely off in our predictions. But after all, at one point, 60s, John Brenner was predicting every American home would someday have a computer. Everybody thought it was laughable. The internet, this whole cyberpunk movement. Pandemics, I'll provide Margie with an example of one of my short stories that came in second for a Hugo Award about how viruses negotiate with their hosts. And so on. And one of the things we do in science fiction is not try to predict, but to prevent. Self-preventing prophecies like Dr. Strangelove and On the Beach and Failsafe that help to prevent nuclear war. Retired military officers later admitted that we might have had nuclear war if not for those stories. The tens, even hundreds of millions of people who were recruited into environmentalism by Soylent Green and other science fiction stories. But the granddaddy is, of course, George Orwell's 1984, which people on the right and the left cite when accusing the opposite side of trying to become Big Brother. And this dynamic of understanding where the other side is coming from and what their fears are, even when we're opposing them, is called politics, and it's been deliberately killed. It used to be we were able to say, I don't believe that academics and government bureaucrats are the greatest danger, but I can understand you fearing them. I fear aristocrats and faceless corporations. Let's guard each other's back. That is what's gone. And that's what science fiction does. Now, let me just, since I have very little time, let me just race ahead and mention a few other sets of assumptions that aren't really quite for small business, but I think small businesses need to be aware of them. One is the banks are constantly trying to cut down on their level of service in local communities with their branches. When the bank branch is their great advantage, because we're going to be entering an era in which all you can trust is your biometrics. And each of us will enter our bank branch once a month saying, here, I'm me. Want a blood sample? I'm me. You want my iris? I'm me. Now help me with all my credentials. Because when you get right down to it, your wallet is filled with credentials and prosthetics for identity and reputation. 6,000 years ago, our reputations were just our face because we didn't know anybody. We didn't do business with anybody who didn't know us in our reputations. Now we have all these prosthetics for reputation because we can do business with people all the way around the planet. But you need the prosthetics of a bank voucher or or your credit card or your ID or your passport. So I don't think banks properly understand this notion of credentials, and there may be some small business opportunities. I think that this election is going to show us that we've wasted 4 years dealing with the problem of anonymity online. Now, to the transcendentalists who believe that anonymity frees people to be what they want to be and experiment online, you know, the old saying, on the internet, no one knows you're a dog. You remember that was a New Yorker cartoon showing a dog typing away at a computer. It was one of the classics about the internet from the 90s. And this is true. We need some of the advantages of anonymity, but the disadvantages of anonymity are killing us. And now I'm going to take a bigger perspective of time, because what we're experiencing right now has happened with every single new communications medium across the last 500 years. Printing presses, when they first spread across Europe, were used to spread horrible, slanderous tracts by Protestants against Catholics or Catholics against Protestants, exacerbating the horrible religious wars of that era. But over time, the production of books did elevate humanity and make us better and smarter and wiser, having vast amounts of information outside our skulls that we could refer to any old time we wanted to. In the 1930s, loudspeakers and radio vastly amplified the power of the human voice, helping to empower some of humanity's very worst manipulators. And we almost didn't survive. The great saving grace in the English-speaking world was that our masterful uses of these godlike amplifying media were on our side. Franklin Roosevelt, Churchill. Otherwise, it was a time when we almost died because we weren't used to the amplifying power of a new medium, and we got used to it. Radio does a lot of harm in some places today, but it's just nowhere near as powerful a disruptor, and it helped to elevate us. This is happening in the internet right now, which brings me full circle to the problem of anonymity. There would be reciprocal accountability for some of these horrible, horrible, malignant meme spreaders, which are poisoning our civil discourse, if anonymity vanished and everyone was known by their true names. But then we would lose those good things about anonymity, the ability to be a dog on the internet. Well, there is a potential win-win, and it's called pseudonymity. And a business that would provide rentable pseudonyms that can carry your reputations with you would be a business that would both do a lot of good and I think make an awful lot of money. Because, you know, I just gave you a perspective of 500 years. That's my job. You know, your previous speaker's job was to help you pragmatically to get through the next few weeks. And they were very wise and I learned a lot and far more useful than me. But my job is to show you that there is a bigger perspective to all of this. And it goes all the way back 6,000 years, because across those 6,000 years, almost all of our ancestors, 99% of them, lived in pyramidal social structures dominated by a few lords and kings and priests who told us what to do, our ancestors what to do. Very few experiments broke from that, like Periclean Athens around 500 BCE, Florence, and our 250-year spectacularly successful experiment. And it is in the context of that experiment that we created competitive systems like markets, like democracy, like science, the most competitive of all fields, like courts and sports. All 5 of them, arenas that do what Adam Smith said and use competition, but competition always across those 6,000 years failed with cheating. And if you look at sports, how does sports work? Regulation, umpires, careful management to prevent cheating. And I'm afraid one of the things that's going to be crucial for small businesses to survive across the next decades will be to prevent the plague of cheating that killed all enterprise systems across 6,000 years. Read your Adam Smith. That's what he railed against. And that's what the American founders rebelled against. And that was a little bit of a blah, 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 you know, with very wide perspectives. But I think some of you knew what you were going to get when you invited me. So there.
David, thank you very much. And to everyone who joined us tonight, we do appreciate it. I think we can all agree that startups and small businesses come from the idea of someone creative and inspired. And it's difficult enough to set them up, and then wham, a wave in the form of a worldwide pandemic knocks them down. But tonight I hear optimism. I hear that companies can plan, pivot, and push to see it tomorrow. They can focus on the bottom line, but also have their eye on the future. And it does pay to be a visionary. David, I would guess that we'll see on Shark Tank someone that's coming forward and trying to market some sort of credential business. So we look forward to seeing that. Ella Hood, Daniel Gertrudes, and David Brin, thanks so much for joining me tonight for this panel of pandemic planning, how small businesses and startups must adapt. I'm Margie O'Brien. Good night, everyone.